Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Let's see if we can find some more
And real quick, Steve, I actually have a personal request I want to make to the ISE.
Yep.
For my webinar that I'm doing on October 6th with you guys, I plan talking a little bit about overseas bonds and hedging overseas bonds and ways with which you can trade them. If you guys can get leaps on these options by then, I'd appreciate that. That would help my presentation.
You know what, Mike? We won't, but we have approval. We do have approval from the SEC. It's just from the market maker's viewpoint. They want to see more volume, that goes out, let's say 9, 10, 11 months, whatever it is, and then we're going to add them. In fact, we are going to add 3 new pairs. That they probably will be trading when you come back. Let's see, which ones are we adding? We're adding the Australian dollar, the New Zealand dollar, the Mexican peso, and the Swedish krona. Those will be trading in a month or two, and there is some other information that I cannot yet divulge, but some more interesting things that are going on in the FX world at the ISE. So stay tuned. I know many of you come back each and every week, so continue to come back. So I think that as you get more and more comfortable, you're going to find a strategy that makes sense. Question about the Brazilian real. We don't have what's called the information sharing with that right now. We're working on that very, very diligently, and that probably will be the next pair that will be trading because we've had numerous requests for it. But it's just sort of a technical glitch between our SEC and their regulatory body, and we just have to get those agreements, and we're working on that. That could come any day now.
I would love to get in on the roof.
Yes, I think that would be an amazing pair to trade. Currency options to me are great. I mean, I traded equity options for so many years. I just wrote a couple articles, SFO, Flexure, FX. I wrote another for another publication. In fact, I'm always writing articles, and what I like about it is what Mike said, is that, you can find, let's say the dollar against the yen, that's sort of going to trade a lot like the CBOE's VIX indicator, or, you can look at that and look at it as a fear factor. You could look at AUX as a fear factor, but some of the other ones, in fact, Mike showed you the euro today, that doesn't necessarily trade, and that's why I think, Mike, that's why you liked it, right? It doesn't necessarily trade in lockstep with the U.S. equity markets.
Right. Yeah.
So, I mean, that isn't, if you're looking for condors, I guess that's the next question, Mike. When you are looking at condors, what do you do? Do you consider diversification for your clients?
Well, one thing with that, in the world of the condor, you got to do a couple things with it. In the short term, is the short term going to always be an uptrend? And in the stock market, the answer is an obvious no. But what I personally like about condors is that I like looking elsewhere, and this is just me personally, I like to look elsewhere for the condor than the stock market. Now, does that mean that we have clients in stock market condors? Absolutely. That's definitely one of the things that we do.
But you're in different indexes, aren't you? And you're in different groups. Like, you're not going to be in all oil stocks, or you're not going to be on all financials for obvious reasons, correct?
Absolutely. And in terms of real diversification, you can say, oh, I'm in small caps, oh, I'm in mid caps and large caps. Well, last year, how did that diversification work for you?
Correct.
If you were doing something like diversifying through the euro or diversifying through the yen, which, everyone's favorite underlying symbol, YUK, Y-U-K.
Of course.
If you're doing something like that, what is your level of diversification? And if it's just different stocks, are you really diversified?
It's a great point. And you know what? You got to remember, hedge funds, I mean, we're all doing this for their own portfolios, but hedge funds follow correlations very, very closely. But you got to remember, you could do all sorts of analysis, statistical analysis, but you got to remember that statistical analysis worked in the past, and it may work in the future. However, if you're going to quote-unquote bet the farm on that statistical analysis, you got to be careful. I think that's Mike's other point, is why he doesn't want you to have 100% of your money into anything, because, I mean, it could go awry, correct?
Oh, absolutely. I mean, it's something to where if you, in the book, Nassar Taleb, I think I'm pronouncing his name right. He has a couple of books out there. The one, Fooled by Randomness, and the other one, his more recent one, Black Swan. With that, he talks about there's two people have two different viewpoints, and if one person says that if the coin is flipped 10 times in a row, heads 10 times in a row, one person is going to say, well, it's still totally 50-50 chance that the coin's going to be heads on flip number 11. Whereas the other person says, that coin's got to be loaded. If it does that, it's going to be 100% chance it's going to be heads. So what do you really view yourself on the marketplace? Statistically speaking, does the past mean that the fact that the market has done so well in the past mean it's going to do well in the future? Good gosh, no. We could be in a totally different marketplace now. The point is that you never know. And with that, you need to kind of decide which one works for you. Now, if we do enter a marketplace like we did in the mid-'60s through the early '80s where we're flat, and you're 15 years away from retirement and you're counting on the stock market to go up enough to fund your retirement, well, if that happens again, you're going to be not having a very happy retirement for the most part. Diversification is to where not only are we putting you in just small cap, mid cap, or large cap stocks, that's not our philosophy at all. When we talk diversification, we want to do diversification.
Very good point. And again, you can get, let me show Mike's email address again. There's a couple more questions, Mike, and then I'm going to let you go. That's let me go back. It's the schedule for the webinars. Sorry about that.
I apologize, folks. I didn't bring that slide up.
That's okay. We'll get to that one. Sarah has a question for me, and she wants to know, what is the quoting convention here at the ISC? The dollar is the base currency. If you look at it very simply, FX options are going to trade, or I should say foreign exchange in general trades as a relative proposition, meaning that you have a base currency and what's called a quote currency. So the base currency is the U.S. dollar for all the pairs here at the ISC, and that just means if I'm trading against another currency, the quote currency, of course, how much of that currency will I get with the U.S. dollar? Of course, you can turn it around, and you could have the foreign currency, depending on where you live, of course. That could be the base currency, and the U.S. could be the quote currency. At the ISC, we have the dollar being the base currency. So if you're bullish on the dollar, you'd be buying a call, and again, like Mike said, if you're bearish, since it is the base currency, you'd be buying a put. It's that simple. Question, what is the min, from Mike, what is the min and max time you place the Condors? Yeah, good question, Mike. What's your sweet spot as far as timing?
1 to 2 months. It just kind of depends. It would depend on how volatility is moving for the time frame. Typically, one thing that we try and shy away from is the final month, and I'm sorry, the final week.
Yeah.
And that, like the juice that you see that final week, everyone gets tempted by the lure of the theta demon, so to speak, in that every day you get all this time decay working in your favor, and for only 4 days you can actually make this much money and this high of a percentage. And in terms of time decay, without a doubt, that's the best way to go for time decay. The only problem with the theta demon is that you have the gamma monster working against you. And if that stock moves, or that currency moves, or that index moves, whatever you want to do, it's going to hurt, and it's going to hurt bad. I've talked to I don't know how many people that have done that, and they do it well for a while, but then eventually they get bit on the quote-unquote black swan event that happens more often than once in a lifetime, it seems. And it hurts them, and it hurts them real bad. So typically, the main rule in terms of time frame that we have, we're usually staying away from the final week unless we're fairly out of the money, unless it's that final week.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcast.